Let's take the recent events in Venezuela, throw them out the door. Let's take other geopolitical risks that we've been talking about, which we have no control over, what direction they're going in. We'll forget about that. We'll forget about Jerome Powell and the situation, whatever that is going on in Washington. That gives us time to focus on earnings. Q4 earnings season is here with JP Morgan, Delta Airlines. We'll cover those. Economic data, 8:30. CPI, hot or not? When are interest rates moving? We'll find that out. Blue Putnam, 8:35, will be joining us with his take on the December reading. Folks, this is going to be an easy Tuesday on pre-market prop. Let's get it started.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right. The buy the dippers are out yesterday, and they pushed us to a new all-time closing high. We're down about 10 handles for that. No big deal. Resting over 7,000 at 7,006.75. The buck up 11 cents, 98.74, trying to clear that 50-day moving average. TLT just hanging out at the low of the move. Maybe we'll get some action off that. Down 23 cents, 87.44. USO perking up a little bit, up 62 cents, 72.27. Gold and silver. Well, GLD having a tame day. That's up just a tad, 28 cents at 422.51. SLV up 1%, 78.09, just residing in the stratosphere. In Bitcoin, don't look now, trying to clear that 200-day moving average, but we all know it needs to break out over 95K for a big move higher. Thanks to TradeStation, born to trade, chart, analyze, customize, all in one platform. We will be working on your radar screens, your trading tools that you can use through TradeStation. Dennis is going to hop on here, and Dennis, a little different tone here in the markets as we start the show.
Yeah. Is it? Is it really different, though? I'm not even sure. It kind of feels like Groundhog Day around here. The market dips a little bit, and they just come back and buy it. To your point in the intro here, this market is so resilient. I mean, it's not afraid of anything, and the only fear out there continues to be the fear of missing out. I don't know what changes that. I'm not sure if there's anything that can change that, because this market, at least the SPY, I mean, we have these pockets of weakness in certain stocks and certain sectors, but the SPY, just being as diversified as it is, just continues to grind its way higher. And if you're sitting here with your bear hat on and saying eventually the market's going to crash, you'll be right eventually, but you may miss a lot of good trades as you're sitting around waiting for that market to crash. I love the overlay. Brent's still working on this. This is what we're going to be talking about. Tariffs and earnings and Boeing. What Boeing? CPI with blue. And then we're going to rate those ratings here towards the end of the show here. So get ready, because we got some analysis coming for you here. The Brentster is coming in here hot. How's the Brentster doing?
Doing good. How is pre-market prep doing today?
We're doing good. The chat's lively. We've got some stuff going on here. The Trumpster tweeting as he always does, or truthing as he always does last night. Again, the drivers, it's like Groundhog Day around here, because the drivers really of price more than anything is Trump. And he had a new truth last night. We saw China stocks getting tanking, and we're like, what's going on? Something's been said. And we're like, it's probably Trump. We were live in the STN room when this is going on. And of course, read us the Trump truth here, Brentster, if you want. And
Sure.
We're going to analyze this.
Effective immediately, any country doing business with the Islamic Republic of Iran will pay a tariff of 25% on any and all business being done with the United States of America. This order is final and conclusive. Thank you for your attention in this matter, President Donald J. Trump.
Okay, so initially, we were looking at this and analyzing it and saying, oh, this is, so who's doing business with Iran, so you're analyzing from that perspective. But that's not the case. it's, well, it is the case, but like how much business is coming. So we thought the tariffs coming from Iran, but it's not. It's any country that is doing any business with Iran at all gets automatically a 25% tariff. Who does the most business with Iran? You can guess it. It's China.
Woo!
So we got China stocks going straight down this headline because effectively, immediately, they're going to get a 25% tariff. So we're back to tariff wars again. So here we are, FXI trading down 1%. You can go through all your China stocks, all trading lower, Alibaba, KWeb, JD. You can go through the whole, all of them here. But again, China still had a great, run here and even a good start to the year. But emerging markets, China getting hit from this Trump headline.
What a great TV show. And I'm not going to quiz you, Dennis, because this is even before your lifetime. But there was well, no, it was probably in your lifetime a little bit. Have you guys ever seen reruns of To Tell the Truth?
No.
Joel,
I don't think I know that. What is this?
You never heard of the TV
I've never
show?
even heard of it. No, I'm sorry, Joel.
Come on now.
Yeah.
I think Jay Rice will definitely know this one. It was a show. It was originally hosted. It actually started in 1958 by a guy named Bud Collier. And later on, it went on. Joe Gargiola. Do you guys remember him at all?
No. None of these people. These people were all way before I was born.
It was actually a pretty good show. What it would do is like they would get 4 people up there, let's say 3 or 4 people, and one of them would really be like an electrical engineer or something.
Okay.
But so the contestants would ask, but they'd have like really smart people in there, and so you would have to figure out which one it was. The contestant was like, to tell the truth. So that was an old TV show. You should go look it up.
Okay, why? Why are we talking about this?
Truth, because truth.
Truth Social.
Yeah. Bad tangent?
No, it's fine. We'll go with it.
Do you want to hear a worse tangent? And I kind of got to get this off my chest.
A worse tangent? Yeah, let's do it. Yeah.
I had a fight with an AI bot yesterday.
Like a physical, it's gonna be eventually we're gonna have physical fights.
Put your dukes up.
A verbal confrontation.
Did they? Who? Gemini, ChatGPT? Which one?
It was a Detroit Free Press.
A Detroit Free Press bot.
Yes.
What was it over? Michigan ball?
No, non-delivery of my paper. For 4 Sundays in a row. Yes, wow. I still get the Sunday paper.
Ah, that's cool.
So they say,
and it hasn't come. Why is it not coming?
Don't.
Why did the bot? What did the bot say? What's the bot's excuse?
Well, first of all, they tell you 3 times before you get through to somebody that they use AI. And are you okay with AI?
He said no.
No, I'm not.
No, I said yeah. I said
that's
yeah.
nice. That's nice. You're so nice to the bots, Joel.
Yeah.
He's
Or else,
nice he's half Canadian. He's pretty nice.
So the bot comes on and says, "What's your name?" And I said, "Joel Elconin." And they said, "How can I help you, ma'am?"
Ooh.
Right there. Tough start.
Yeah.
And I'm like, I'm like, do I sound like a ma'am? I'm
do
like,
I sound like him? He's going at the bot. What do you think? Do I sound like a ma'am?
Yeah. and so we're going back and forth, and I'm like, you're a bot. I go, what's your name? And it's like, Vicky. And then it's calling me Joel. And I go, I know you're a bot. And so we went back and forth. And so it's the reason my paper is not delivered. It's been delivered by a carrier for, I don't know, 100 years at my house. Well, the reason it's not delivered is because it comes on Sunday and the post office is supposed to deliver it. And the post office doesn't work on Sunday. And I'm like, what the hell are you talking about? And I'm like, well, send me an email. I go, no, call me back. Oh, no, we don't have
get your Sunday paper on Monday. We don't
No, I
have
never
delivery
got
service.
it. I haven't got
Oh, you
it.
don't get it at all.
But we went on, and I was just,
This
it
bot
was
was just
fuming,
getting under
and
your skin.
yeah, Joel. That's what he
Joe-
kept on calling me.
Joel.
Yeah.
We did
So-
just get some RCAT guidance right at 8 a.m.
Woo, RCAT.
RCAT guidance. The stock is moving higher on this Q4 sales, 24 to 26.5 million. 2025 sales expected 38 to 41 million. Looks like some solid guidance from RCAT.
Stock moving up 6% here, showing some life. We know the drone stocks here have all been showing life, even the non-war ones, but our cat moving up here too. Also, Unusual Machines just said something as well.
Okay,
and I
looking,
don't have it in
UMAC.
front of me here, but there was some
Looking.
presentation I'm getting. They released an upside. This is from Mark Lehman. Thank you, Mark. Released an updated investor presentation alongside a newly filed 8K that we believe. I'm trying to open up the tweet here.
Okay.
Will positively, we believe implicitly positively pre-announce 5 million fourth quarter 2025 revenue. Do you see the 8K that was just filed?
I see one from yesterday.
I'm wondering. This is from Needham. Sorry, this is the note from Needham on the 8K from yesterday.
So there you go. So the
this
UMAC
is Needham
8K
commenting on
was
yesterday's 8K.
Yeah, and that presentation slides were in at 8K from about 4 p.m. yesterday. So did the stock move last night? It didn't really move last night.
Night, but it sure is moving this morning. So
They
we got
like
RCAT and UMAC moving here, part of the same grouping and under the drones. So drones are hot. The AVAV, we've been in for a long time. That one just flying, although I've sold a lot of it now. Just the drone stocks are hot, and this is a good segue into the war stocks here too, which we're going to
just real quick, RCAT for you RCAT investors right now, it's a big level here. You're trading at 1257. That's up 63 cents. You're dealing with a double top here, 1256, 1272. What are the bulls and the bears going to do there? After that, you rip into a big red candle all the way up to $15. So starting the day out with a 10-star level here at Red Cat Holdings on our trade station charts.
Big move here, or cat. I mean, these drone stocks still, like some of them are sleepy here. My whole drone list is quite big. And then you have the space stocks too, and they've been moving too. I mean, RKLB and ASTS have just been monsters here since, we really pointed them out 2 months ago, and they just keep going here. Couple sleepy ones in the mix here. Archer's been kind of sleepy, but starting to perk up. Keep an eye on ACHR, because if they're all starting to move, Joby too has been kind of sleepy here. Some of the non-defense drone plays, though, those ones haven't been moving as well. But the defense stocks have just been on fire. And if you want to talk your number one defense stock here this morning, which has been quietly forgotten, but not by traders, because this thing, it doesn't get talked about a lot in the media. But holy crap, LHX, which is Harris Corp, is flying here this morning. The Brentster, you have a headline here for us if you want to read it to us. What's the deal with LHX?
Yeah, let me add a little press release here from BusinessWire. L3 Harris accelerates arsenal of freedom with the creation of a new missile solutions company. So effectively, the company is going to be spinning off a missile unit. I believe it will be its own publicly traded entity. And with this, the Department of War, the U.S. Department of War, is going to be investing right there at the top of this press release, is going to invest $1 billion in that unit. You mentioned the price action, Dennis. I mean, this is a monster move for a company like this.
I mean,
12,
we went from
13%.
Department of Defense to Department of War, and the day that he did that, if you just said, look, Trump's going to go on the offensive, we need to buy all these defense stocks, it would have been the best move, because these stocks just continue to go higher. Most of them now making all-time highs. LHX, it's no exception here. Stock blasting off. It goes up literally 20 points yesterday, or 20 points in the last couple of days, 2.5 days. And now we attack on another 40 points here this morning. I mean, I don't know where the pony ride ends on these things, but they are just rocket ships across the board. And every time we get a geopolitical headline, which seems like we get 3 a day, these stocks lift up on that too. So the news flow, and one thing that we do especially well here, Pre-Market Prep and in the STN think tank, is we try to predict news flow. This is not rocket science, pun kind of intended, to predict that news flow here for the war stocks is probably going to continue to be positive. I mean, he's trying to invest another $500 billion into the Department of War and into the defense stocks, and these stocks are the direct beneficiaries of them. If you want the list, we know, we've talked about before, Lockheed Martin, General Dynamics, NOC, LHX, the drone stocks, AVAV, KTOS. I mean, all these stocks just keep flying, and I think they're probably still buys on dips.
I can't believe that that Frank's ETF doesn't get more attention, more volume here. I mean,
or best ticker symbol ever. This Frank's? This one of Frank's?
This is Frank's. Yeah. Shout out to Frank Holmes. All the people over at Hive and US.
Put the overlay on there at Hive. We'll put it on there right now for War, because I didn't even realize WAR is another Frank Holmes ETF. Now, again, these things are thin, folks, so be careful. Some of these ETFs aren't as thick as other ones. Like the Jets has got good liquidity. War is a little bit thinner here, but great ticker symbol. I mean, Frank's all over everything.
Yeah, we could get to those. I don't know if it's just me, but
it is.
War stocks?
It usually is just Joel.
Okay, so I shouldn't be worried about all these war stocks going up.
Yeah, you should be.
Oh,
I mean, they're going up in anticipation of the whole of like Iran. So we've got the Iran situation that escalated last night. All of a sudden, if you're even doing business with Iran, you're getting a 25% tariff. So, I mean, there's lots of reasons to be concerned here with all these war stocks going up, but they're going up for good reason. I mean, we had the Venezuela situation. We got the Iran situation. We have the escalating tensions over Greenland. I mean, the Mexico situation sounds like it's defused a little bit for now, but this is the Department of Defense, the Department of War. It's on the offense, and these stocks are the ones that benefit from it. So, whatever your opinion is of this administration here, if you're a trader, you've got to be listening to it. And it's listening to it is telling you every time we get a dip on these war stocks, they are buys. We have the potential for a dip tomorrow once again here on these stocks because we still have not got the Supreme Court ruling on tariffs. So if, and it's a big if, that the Supreme Court rules against Trump and tariffs and they have to pay all this money back, they're probably not going to have the $500 billion that he wants to put in. So there was another truth. You may be able to dig this one up, Brenster, in the background. I don't know if we showed this. I don't think we showed it yesterday. But it broke in the middle of the day. And Trump was saying if the Supreme Court rules against him, that there's going to have to pay back so much money that it's going to take him years to figure this out. So, I mean, it is a huge ruling here. Brenster, can you dig in the background? Because I'd like to see that tweet. Sure. He said in the truth, at the end of it, we are screwed if they rule against us here. That was the official president's terminology at the end of the truth. It said, we are screwed.
Got it.
Look for that one. Bring it up on the screen because this is important because tomorrow we may not get the ruling. Everybody thought we were going to get Friday. We correctly pointed out on this show, they're meeting, but they may not rule. Right away, they said, we're not ruling today. So now this is the next chance to rule. People are going to say, oh, they're ruling tomorrow. They never tell you when they're going to rule. They're telling you that this is the next potential chance we're telling you for them to rule. But here is this truth too, Brenster, if you want to dig through it, this is important. It's very important because the whole market's going to depend on this as well. The actual numbers that we would have to pay back if for any reason the Supreme Court were to rule against the United States on tariffs would be many hundreds of billions of dollars, and that doesn't include the amount of payback that countries and companies would require for the investments they are making on building plants, factories, and equipment. I mean, Apple's talking about $600 billion investment. Remember, all of a sudden, does that go on the back burner if tariffs are ruled against? Probably. He's probably right. Anybody who says that can quickly and easily we are talking trillions of dollars. When these investments are added, we're talking trillions of dollars. It would be a complete mess and almost impossible for our country to pay. Going through all the bottom of it. Basically, bottom line, we're screwed. So this is a huge ruling tomorrow. It is going to move the market. If it comes tomorrow, it is going to be an enormous ruling. The defense stocks will drop if they rule against. If they rule for, the defense stocks continue to fly because then all this tariff money is going to go right to the Department of War.
I wanna highlight a comment here and get your response. And this is no aggression here. I think it allows us to make a really good point. Look at the comment here. Starting to sound like CNBC and Bloomberg, all politics. How would you guys respond to that?
So we are a trading show, and right now the politics is what is moving the market. You listen to us, maybe 2 months from now, we may not be talking politics as all. We were talking CES, AI a few weeks ago. Right now, it's all about politics. The major moves that are happening in the markets are Trump driven right now. It's the Trump market right now. That will change. It will not always be the Trump market. We saw, obviously back to April of last year, the whole March, April was all the Trump market. And then we were in this bull market. We weren't talking about Trump for like June, July, August, September, October. There wasn't that many Trump headlines. There wasn't that much politics. Right now, politics drive price. So on this show, we will always talk the drivers. What is moving the market? What are traders talking about? And right now it is all Trump. China stocks down. They're not down because of the technical charts. They're down because what Trump truthed on Iran. That is why they are down this morning. So it's a very, very important to continue to focus on drivers of price. Right now, it just happens to be the politics.
Boy, probably we get easy questions and we get easy questions. That has to be one of the easiest questions I've ever had on this channel. I mean, first of all, we're about, on a lot of stuff, we're 8 to 16, 24 hours ahead of what Bloomberg and CNBC are talking about because they have planned programming and they have to put in the guests and they have to have the paid sponsors. And we have those too. So that's one thing. The other thing is that the implications, they report the news. We give you the implications and the stocks and
News
how
analysis.
they're moving and sympathy plays and digging and say what's going to happen in scenario analysis. You don't get any of that anywhere else. It's, boom, RCAP pops in. I don't know what time they're going to put that in, but we gave you a level where it's trading.
We'll talk about that 2 hours from now.
Yep.
So, but again, bottom line is we have to talk the drivers. I don't want to talk about Trump every day, but we have to do it because it's the driver of price here right now.
Look at this comment. Look at this comment, Triple D. If someone thinks you can separate the politics from price, they shouldn't be trading this market.
Yeah, and that's it. I mean, we can say, and there's some great technical analysts out there, and you can look at the charts and say, oh, this is looking good. But I mean, if you're looking at like BABA or the FXI and it's moving up and all of a sudden it's a pullback. Now you can use the technicals and say, well, look, we have been breaking out and this is a pullback here. And, maybe the taco trade materializes here and, this China tariff 25% doesn't go in. All of that could be possible here. But I highly doubt that China's going to stop doing business with Iran because Trump's threatened another 25% tariff. I highly doubt it. So all of a sudden we're back into the tariff war again. So that's why the China stocks are going down. They had a huge day yesterday, but they're pulling back here today. So continuing on, though, with the implications, because we want to talk trading ideas tomorrow, what I think is the potential to happen, again, if we get the ruling, if they rule against, and I'm not fully convinced they're going to rule against now. Can we go to PreMarket, Brentster, and see if there's an updated percentage on what are the odds that Trump is going to be ruled against on the tariffs? Because I think the delay works in Trump's favor, because if they were just like going to hold up, what the lower courts were saying, they could have just ruled on it on Friday. But there's obviously some people who are talking about this a little bit farther. This is the main thing on their docket. It's no doubt about it. This is we're talking trillions of dollars. So now it's a 27%. So it has ticked higher. It has ticked higher in the last few. The delay works in Trump's favor here because it means the Supreme Court's thinking about overruling. It's like, when you're like, you're looking in sports and they have, like a flag down. It's taking a long time to decide. It usually means it's more controversial when it takes a long time. It's like they come back to you 30 seconds later, like, well, that was an easy call. It's all of a sudden we thought this was an easy call, but the delay here makes me think it's maybe not an easy call. And there is the potential that they may actually rule with Trump. So what moves? Defense stocks go up if they rule with Trump, but because of that $500 billion. But also, obviously, we've talked about, all the importers, think about Lululemon and RH and all these companies, Abercrombie and Fitch got killed yesterday. The companies that are bringing in, obviously a lot of imports from China to sell them. Those ones want, they don't want tariffs. Deere has talked, they're going to have, a potential double impact from tariffs. They said it this year at CES. So if tariffs are ruled against, Deere is going to fly. If tariffs are ruled for, Deere is going to go down.
Let me jump back over to PreMarket here. We have a couple of very astute people in the STN room that use PreMarket regularly. Mike Franz, also Prad. And one thing that they've been pointing out to me is look for, if anyone wants to use PreMarket for trading color for like trying to do some research for trading, look at the contract value over here. There's $2.5 million that have bet on this. Look at some of these other ones though. Look at this one. So here's another one that's just saying pretty much the exact same percent. Will the court force Trump to refund tariffs? That's also 26%. That's a different contract. Look at this one. Will the Supreme Court rule on Trump's tariffs by January 31st? It's 70%. So there's a 30% chance that we won't get, at least according to PreMarket. PreMarket doesn't know everything.
No.
But there's at least a 30% chance out there somewhere that maybe we won't even get this ruling in this month.
May not happen.
Just a little bit of a heads up, a little bit of a warning there, folks.
Do you know some guy bagged 400K on Maduro getting captured
on PreMarket?
Yeah.
Wow. I mean, yeah. I guess I'm not surprised.
You can make some money on this PreMarket there, but I'm sticking with the stock market. That's what I know best. We're gonna stick with the stock market. It's fun to go over there and look there. I know Prad's doing a great job. He's arbing back and forth, and we do that. He does that in the STN think tank there, talking about arbing between PreMarket and the real stock markets. Cool strategies and stuff.
Yeah.
But yeah. So okay, back to our regularly scheduled programming here. Another stock that potentially benefits, and not directly, but it's been classified as defense stock in the past, is Boeing. And been forgotten here. I want to do the Delta earnings quickly here. We'll get these in before CPI because we have CPI in 3 minutes. We're scrambling a little bit here. Give me the Delta earnings, and then we also have a plain order for Boeing here again. And Boeing is flying. I wanted to put it in my acronym, and it's flying here. So we're going to give you Delta earnings and give you the trade idea off Boeing.
Delta reports Q4 earnings 155, a 2-cent beat, pretty modest beat. Sales beat a little better, about 16 billion. Analysts were looking for about 15.6 billion. Guidance was like kind of mixed. So the 2026 guidance looked fine. They're expecting 650 to 750. Analysts are around $6. So that looks solid. The Q1 guidance, though, you could drive a truck through this range. They're expecting Q1 earnings in the range of 50 to 90 cents per share, a 40-cent per share range to get you 50 cents in earnings. The estimate is right in the middle there, 70 cents. So that's in line. But I feel like, if Delta shares are trading down a few percent here today, I feel like it might be that Q1 earnings guidance being so wide, maybe potentially indicating some uncertainty on the side of Delta's management.
Lots of things to think about with the airlines here. Obviously, if we have geopolitical risk rising, people are going to travel less. So Delta is an international carrier. So you have to think about that too. So that's one worry. If the Venezuela starts opening up the faucet, though, that's going to potentially bring down oil prices, although it's difficult to refine, and that could be a good catalyst for Delta. So there's a few things to think about here. Overall, I think this uncertainty with the 50 cents to 90 cents is probably the whole geopolitical situation that's a little bit built into here as well. I mean, you're an airline trying to predict, where your earnings are coming. This, geopolitical situation matters here too. On a side note, Delta orders up to 60 Boeing 787 here is for international expansion. So obviously this benefits Boeing. Boeing moving up slightly here in the pre-market, but give us technicals on Delta and then quickly talk Boeing.
Oh, real quick, Boeing, the EM, a chicken scratch up there. That means expected move. That's what the option makers price into the movement from the closing price, the nearest strike price. That comes in at 4.6. That would bring you down to 66.40. Pre-market low stands at 66.60. There is a good number for you. Coming back on the upside, the bottom of yesterday's range acts as potential resistance. You can see that at 69.61. Let's race this all up here. Let's go to the Boeing chart. Couple catalysts for Boeing here over the last few days.
Yeah, it's been moving.
It's been moving up another 47 cents here. Not much here. What's the high of the day from yesterday? Up 239.95. For this one, are we just going to look right? We're going to hold the top of yesterday's range and plow to the next daily high. That comes in at 242.69. But after a really good run up here, not moving much off that news.
CPI coming. Bottom line, I'd buy dips on Boeing. I think sentiment has turned here. CPI, Brentster, get ready here. We're going to have Blue come on to analyze the numbers here in 3 minutes. I just went wide, cancel all my orders. Let's rock.
Okay, CPI.
7 seconds here. Standing by for CPI. We're looking for a core reading up 0.3%. Number is standing by for the number. Market is moving higher here. We have a reading 2.7% on a year-over-year basis. I'm still standing by for our base reading here. Our base reading, core CPI, is lighter than expected, 2.6% on a year-over-year basis. Also lighter than expected on a month-over-month basis, up 0.2%. We were expecting a 0.3% increase, so a little, just a tad lighter than expected. Futures just moved a good, like 17 points higher.
Yep. They
PLT
like it.
moving slightly higher here on this. Also, IWM, which is obviously a lot more sensitive, is ripping higher on this. So you don't want to look at SPY when you're looking at this. You want to always look at the IWM. Why? Because a lot of these companies borrow money. A lot of these companies are much more interest rate sensitive. So a big rip in IWM was trading down. It just ran up 1%. This is a big move up here. So CPI obviously not hot, but good enough for the IWM. Steady as she goes.
Yeah, just no knee-jerk reaction down at all. Straight up into uncharted territory here. The S&Ps just made a high at 70.3250. I'd even put a level in above the yesterday's high at 25.5, so you could figure that out on your own. IWM ripped, got a big rip, a little bit more interest rate sensitive. Did pop over 264.15. You pull back 60 cents there. So you got a whole number you never seen before. S&P's continuing to rip. If you're an IWM trader and you feel like you missed out here, let's see if you can come back under 261.60. That was a double top from Friday's and Monday's session. Looking at the TLT, I mean, what does this say, though? If CPI is coming in, well, maybe we could push June off the interest rate cut. Maybe we won't get any cuts all year. Who knows? But
Joel,
not a bad number.
That's a good point, Joel. We will update on the CME FedWatch tool. It's if you go to the CME's website, it's delayed about 10 minutes. So we're going to need to wait till about 8:40 or so to see if we have any updates for Fed projections, Fed fund futures bets.
Okay.
Big move here. Blue will be coming on to analyze in 3 minutes here, but what you're seeing is a knee-jerk reaction is significantly higher here. And again, IWM back up to the highs here. So market, the bulls still remain in firm control here despite all the geopolitical situation. There's no fear out there except the fear of missing out. Big moves, obviously. We talked already IWM, but don't forget your smaller stocks, moving up here. XBI, which was down all night because there was a couple stocks that actually were in the XBI that had some bad numbers. I think it was TBTX. Yeah, okay. Down 30%, which is a big portion of XBI. So it was trading down, but that's XBI is bouncing back here this morning too. So lots of things to consider here. Markets moving higher as they applaud the CPI numbers.
We have Bitcoin moving higher, responding on this. And why don't we just take a little break here?
Yeah, take your 1 minute.
To say thanks to our wonderful sponsor, one of our wonderful sponsors, Hive Digital Technologies, a global leader in grid-powered data centers for Bitcoin mining, high-performance computing, and AI. Hopefully, we'll be hearing from Hive to see if they achieve their 3% goal for the world's Bitcoin production by the end of last year. Hopefully, we'll be hearing from them soon on that. There is a QR code in the bottom right corner on screen right now. You can scan that to go over to Hive's website, Hive Digital Technologies. Thanks again to Hive.
This charts like the Hive, Riot, Mar are all perking up a little bit. Like the Hive as well is perking up a little bit here too, which is nice to see. Bitcoin in itself is obviously a risk sensitive. They are sensitive to interest rates. Why? Because Bitcoin doesn't yield you anything. Bitcoin in itself. So as interest rates go lower, it becomes more attractive. It's not an alternative because, you have a lot of dividend stocks out there, that they move along too. But when you have, Bitcoin that yields nothing, if you're just holding Bitcoin, we're not getting paid anything. Well, if interest rates are lower, it doesn't matter as much. So also it's risk, and Bitcoin, with interest rates going down, it's going to benefit from that just as a risk on assets. So I'm telling you, man, like it's putting in some bottoms. It's really putting its work down here, Bitcoin. And I'm hodling here. This level's just been enormous here. But eventually, I feel like it's going to resolve itself to the upside. I like Bitcoin.
Well, the 200-day, this is basis the futures. that don't trade as trade around the clock, not as much. They're closed on Friday until Friday at 5 p.m. until Sunday at 6 p.m. But you got a clear level here, 95K. That's what you need for the breakout. Just trying to get back to the 200 day or the 50 day, and then back up to the 200 day. We talk about the 200-day moving average, and I've spent some time at it, below it, and now moving up. So there is your Bitcoin segment for today. We will be joined here momentarily by our boy Blue Putnam, our former chief economist at the CME. Do we want to sneak one more earnings in before
Do
Blue?
JP Morgan.
Okay.
Let's bring it up here, Brentster. If you have
Cool.
the JP Morgan
Yeah, of
numbers,
course.
give them to us.
Give me 1 sec. And we got a nice comment from Jamie Dimon. I mean, I don't know if it's nice. It's just nice to highlight on air. Company reporting a decent beat, 523 in earnings. Analysts were looking for around 492 sales. I think sales always beat for the big bank. Sales 46.77 billion. Analysts were looking for 46 billion. Even that comment from Jamie Dimon that I wanted to read, and when I read it to you guys a little bit earlier when we were prepping for the show, you had a reaction. So I want to focus on that reaction after I read this comment here. On the conference call, Jamie Dimon saying the U.S. economy has remained resilient. Actually, I don't know if this was on the call. This might have been in the press release. The U.S. economy has remained resilient while labor markets have softened. Conditions do not appear to be worsening. Meanwhile, consumers continue to spend and businesses generally remain healthy. These conditions could persist for some time, particularly with ongoing fiscal stimulus, the benefits of deregulation, and the Fed's recent monetary policy. Joel, when I said that there was a nice comment from
Now I'm worried.
Jamie Dimon, how did you respond?
Oh no. Button
Why
down the hatches, baby.
and why would
Because
you
he's
react that way?
always like, oh, things are so bad and credit. And oh, man, we're just money supply and things are just horrible.
He's always very, he's like a pessimist. He's like a perma bear. He runs the best bank in the world, JP Morgan, and he's a perma bear. And when he's all of a sudden start talking bullish, you're like, oh man, there's one of the perma bears throwing in the towel here. Because he's always conservative. He's always talking about the next crisis that's at hand here. So I'm with you, Joel, here. Now Jamie Dimon getting bullish, like, uh-oh.
Anything?
Straddle sellers are dancing in the streets. You had a 11.5 point expected move. You are trading up 46 cents. We always talk about shake and bake and up and down and all around. You did get a couple spikes here. You did get a spike down to 321. You also had a spike on the number. That probably it was actually before the number. That took you up to 331.61. I'm just gonna look at that's a good number. I'll give you a number on the upside here. Wow, we're a ways away because of the bad day yesterday. First things first, if you want to make it easy, let's see if we can get a gap fill in here. We very well could do that. We had a gap down. Where is our gap? We have a gap right here. The low from yesterday, 328.17. That's a level. Fill the gap. Another $3 away. Well into the expected move. It ran and it got absolutely smoked yesterday. So it had a real bad day. Yes. So pre-earnings run not at all in JP Morgan. A little bit different on this one.
Yeah, and JP Morgan and all the banks are notorious for gapping up and then giving it back. They usually have these initial fades. Now, they don't always continue to fade. We have seen precedents here where they gap up, then they fade, and then they start rallying again. So the move after, so long is not as predictable as the fade. But if you're chasing banks on the initial gaps, it seems like you always get another chance. Like they just gap back down, especially the first couple to report. So now, you look at JP Morgan, the earnings were fine here, but the typical gap up $3 and then give it back here. So we'll keep an eye on the pricing action. Banks obviously had a little bit of a weak day yesterday here with the whole news on, and there's been so many Trump truths, I'm already forgetting. Oh, the 10% cap. So, you saw that dip kind of bought on a lot of them. Does it continue to get bought? Does this 10% cap actually go, or 10% cap actually go in, or does it end up higher than that on the credit cards? We don't know yet, but that's, an overhang here because that deadline is coming, and that's going to be January 20th.
So Joel stepped off stage to give Blue a call. We'll track down Blue. Want to just give a little heads up while we're talking the banks. We are going to be getting Bank of America, Citigroup, excuse me, and Wells Fargo tomorrow. Thursday, we're going to be getting the rest of the big banks, Goldman Sachs and Morgan Stanley. So the earnings season, the big bank earnings season is basically 3 days. JP Morgan kicks it off. We get a few in the middle. Goldman Sachs and Morgan Stanley usually end it a couple days later. Then also on Thursday, we are going to be getting Taiwan Semi, TSM earnings. We're also going to be getting a shipper, JB Hunt, JBHT, and also going to get earnings out of BlackRock, BLK. Just a little
This
heads up.
market is not holding the gains. We have leaked it back. So we ripped higher, and then we've ripped back about half the gains here so far. So again, shoppiness continues here with the overall market, but the trend's still your friend, and the trend is definitely higher.
We've just pulled back. Let's just look at it in the context of yesterday's high. I mean, that was the all-time high. So let's see if we can regain that for the regular session. Did put a little distance now in between us and the pre-market high, but 12, 13 handles in this market. Yeah. I mean, little profit taking. I mean, just think about that low that you had from yesterday up to that high at, a pretty good percentage move. If you were buying the dip yesterday morning and last night, nice little rip there, but we're still just hanging out at yesterday's high on the benign consumer price index.
I want to go back to Boeing because I had to cut it short here. And Blue, obviously, we're reaching out to see what's up because he actually reached out and said he was going to be here, and now he's not. Something's up. BA trading up 70 cents here in the pre-market, obviously on the Delta order. We've just broken out here. I mean, sentiment, and I want to get your thoughts on this too, Joel, from a technical basis, but sentiment has turned here towards this stock. It's been in the gutter, and Boeing has been in the gutter for basically 7 years. Back in 2019, we were $435. Then, all the issues that we had with the MAX and everything else, it's just sentiment has really been ugly for this stock. But it has turned. You can clearly see, sentiment turning. They're getting more orders. The company feels like it's turning it around fundamentally, and it feels like it's turning it around technically too. And when I made my acronym for the year, which was BRR, because I'm in this tundra freezing cold up here, I was really torn between going Baidu or Boeing. I wanted them both. So Boeing is up a little bit here. Baidu obviously got that, move on the first day, which, and I've been long Baidu for a long time. But Boeing here, I haven't been long. I kind of want to buy it. I'm looking for an opportunity here. I was hoping for a dip, but, we've been straight up here now for Boeing for basically 1, 2, 3 days here. I think dips on this stock are to be bought. What are your thoughts here, Joel? Oh, Joel's on the phone.
Yep,
I lost my technical analyst here.
That's okay.
Does it not feel, Brentster, like it's kind of turned towards Boeing, like the news flow? Think about like 2 years ago. It's like, oh man, the wing, that fell off. I guess the wing did fall off, but parts are falling off the Boeings. We're worried about the MAX. Joel's like checking not flying on Boeing planes. I mean, I feel like nobody's talking about that anymore. I feel like they've turned this company around a little bit here, and we're getting continued orders. Alaska had a big order. Delta getting a big order here now. I've got to think, like I'm just talking the technicals on Boeing here. Doesn't it feel like this story is turning to the upside?
I mean, the chart, this is what Boeing does. I'm going to go back to the daily here. Blue's going to be joining us here in just a couple minutes. Cool. So we will get his take on the inflation data. This is a runner. This is a runner stock, and that's what it does. And it catches a run, has a consolidation. Here you had the run down, and then a little bit headed, inverse headed shoulders. The only thing I'll be looking at this for today and just give you, I can go to the weeklies. I gave you the one target here on the daily at 240-269. That's definitely attainable. That's within the range. But we talked, there's different technical formations that everyone could talk about. Sure. But the one that's important on a day like this is you close near the high of the session, right? What more could you ask for? You go out near the high. The high was 39.95, 39.81. That was the close. So, don't even, don't look left, whatever. Look right and see, do you hold the top of that range? Is there a little bit of a shake at the 240 level because some size? But that's I'd be looking at. I would not be standing in front of Boeing here, moving up off the news, up 87 cents. And you have a benign market with the two, you have a market going higher too. And it has a good beta with the market.
While we're waiting for Blue, let's do our rating the ratings segment here. So we're going to go a little bit out of order here today.
Okay, hold on, Dennis. Hold on.
Yep,
Hold that thought. Hold that. Hold your darn horses. Ready? You ready?
Yeah.
Ready.
Yeah. That's new.
Oh, Josh.
Josh working in the background here, rating the ratings. I love it.
We call Josh the executioner. I know it's kind of like
we just give him a job and he executes. This guy gets stuff done.
Thanks, Josh.
So awesome. Rating the ratings, and obviously we can't cover like 50 ratings today because there's literally that many. There's so many ratings today. But I want to start with one, MP Materials here. So MP Materials has been moving up higher. I have this in my long-term account. Just recently bought it at $52. It's been a good one. Moving up here, obviously bought it live in the Stock Trader Network room. They get a new outperform for William Blair, but there's multiple catalysts here because the G7 met yesterday. I didn't get all the details from this meeting, but they did meet yesterday on rare earths in the U.S. And you saw rare earths really popping up yesterday. That party seems to continue here today. So MP Materials trading up 4%. Other rare earth stocks is just a pound. There's actually an ETF. You just want to follow SETM. But, Critical Metals is another one. CRML, TMQ, TMC, UAMY was moving yesterday significantly here, United States Antimony Group. So you have a lot of these things. METC is another one. Ramaco Resources moving up here as well. Some of these are direct plays. Some of these just have some of it in there. MP, though, is a direct play here. MP is one the government has talked about before, so it's also a Trump stock. Thoughts on MP, Joel, as we start to break out here?
Nice move. Yeah, nice move here up to 56. My longer term perspective would be 100 down to 50. Let's get halfway back up here. That move is right around 75. That doesn't look like it's in the cards today. What I'll do next is I'll look at the pre-market high. Pre-market high comes in at 68.30. And what do I have? I have not much here for resistance. Where's this double top at here? Double top. We're above that. I'd say get a bid, hold 68, and then not much up there till you get your gap filled, 69.36. But important to hold the bid off the open for MP Materials.
Big pop here. And then going up to other ratings here, because we do have a lot. We got a big call here coming on AMD and Intel from KeyBank. And if you want to show this, Brentster, here.
Yeah, I do.
AMD trading up $7 here now. Had a key reversal to the upside yesterday. And it hasn't had a good start to the year. AMD's been straight down all year, but I kind of feel like we talked about the CES hangover here for a number of stocks, including NVIDIA. Well, AMD kind of shaking off the cobwebs yesterday. And you can see here, KeyBank upgrading AMD to overweight from sector weight, $270 price target. Company is largely sold out in server central processing units in 2026, the analyst says in a research note. Firm supply chain checks indicate the recent surge in hyperscale demand has led AMD to almost being completely sold out of server CPU in 2026, potentially considering a price increase of 10 to 15%. KeyBank believes M1 355 demand and supply, M1 455 support AI revenues of 14 to 15 billion this year for AMD. AMD also initiated with a buy last night at China Renaissance. So yeah, got the double, analyst catalyst here. And the stock's appearing to be off to the races, being up AMD this morning, 3.42%. Joel, show us some technical charts here.
Yeah, you know what? This one, it's pretty far away from the 50-day. I'll just do two candles of interest here where a lot of people got stuck. And this candle of interest is coming into play right now today on the 6. You had a high of 22.92 and a low of 11.25. And you settled that day at 14.35. So that's just about where you're hanging here right now, was the close on that day. So if you want to buy a dip, maybe you wait for the top of yesterday's range at 210. And if you want to sell the rip, the only number, 216, that stands as the pre-market high, just over 216. 216.08 stands as the pre-market high, AMD.
Also was an upgrade on Intel, INTC by KeyBank. Just wanted to mention it. We're not going to go over it, but wanted to mention Rating the Ratings, brought to you by The Fly, your source for over 1,000 breaking news articles daily, delivered in real time with custom filters and alerts. Discover the new Fly Pro platform. That's what I just shared there a minute ago, with AI-powered company analysis, unique KPI charts for deeper insights. There's a QR code. Scan the QR code if you want to learn more about Fly. I did just want to highlight also on that AMD rating, if anyone noticed, any of our astute news researcher people noticed that the Fly had that headline out before 5 a.m. this morning. Fly alerting you, probably one of the earliest sources out there at alerting you to ratings. So thanks again to the Fly.
Awesome stuff.
Sleek new design there too. If you have used the old platform, you're looking for just a real nice design. Go over there, check out the Fly, prothefly.com.
All right, let's go get blue. Cool. Here we go.
Blue, how did your talk with Mr. Powell go? I'm sorry that I'm sorry that we had to interrupt that, but I'm sure he needs your consultation. Blue, how you doing today?
I'm doing okay. A little slow, but doing fine.
Okay, so we got the numbers, and
yeah, better than expected. I mean, better than expected by 1/10. So we shouldn't get carried away.
Perspective.
But I don't think this is quite enough to get a move in January. It might, but I don't think so. But it definitely signals that the Fed can cut 2 or 3 more times in 2026, based just on economics, not the Trump Powell discussions.
So do you think, and obviously I want to, the CPI number is important, but what was really moving markets yesterday was this Powell video, where he's obviously feeling pressured from the Fed. DOJ sued on him now. He felt pressured enough to come out with a video, which is not like him, for something like him to do this. Thoughts on one, the commentary from his video there yesterday talking about the pressure and obviously the DOJ lawsuit. Do you think, and then implications, what do you think Powell's thinking, for the rest of his term?
Well, he clearly, like you said, the video is highly unusual. It was extremely polished, very short, to the point. And basically, what he said, and then what one of the Republican senators, Tilly, said, this is about Fed independence and not much else. So he's right, but the market shrugged it off because nothing's going to happen right away. We don't, President Trump has not made his appointment to be the new Fed chair. And I do think that if you wanted to push Powell to stay on the Federal Reserve Board after his term as chair ends, this was something that might do it. His term as chair ends, I think it's May 15th of this year, 2026, but he's got almost 2 more years left on the board.
That's something that nobody's talking about, Blue, is that everybody's thinking Powell's out, but he doesn't have to leave. He could still be a voting member here. He just isn't going to be chair. So that means obviously his influence still in the Fed as well. Do you think, what do you, well, it's hard for me to ask you what he's thinking, but are you think he's going to stay?
That's
going to really piss Trump off if he stays.
Yes, for sure. And, that's got to be in his mind. But, he's at the age where I'm sure he probably is considering retiring. It's been a pretty tumultuous set of years recently, particularly since the pandemic, not just President Trump. But 2 more years isn't that long to go, and it prevents 1 more Trump appointment during that period. So I have no idea what he's thinking, except I'm pretty sure he's thinking about it. I have talked to people that know him, and they don't know what he's thinking. They don't know what he's going to do.
How old is Powell? Do you know how old he is?
He's like 76 or something like that.
That for retirement.
I will tell you that back in the late 1940s, President Truman did not reappoint Mariner Eccles as chairman of the Fed because Truman wanted to keep rates really low after World War II to finance the debt. And the Fed wanted to start worrying about inflation, which was picking up quite strongly after the war. Mariner Eccles stayed on. He stayed on for his term as governor and fought very hard. It all ended in 1951 with what they call the Fed Treasury Accord, in which the Fed kind of got permission to be independent. And so, by the way, that's the name of the building that's being renovated, is the Eccles building. So this thing comes full circle all the time. By the way, there is one other little twist that almost no one talks about.
Yeah.
The chairman of the Fed is not automatically chairman of the FOMC committee. The Federal Open Market Committee is allowed to elect its own chairman, and it does not have to be the chairman of the Federal Reserve Board. It's a different committee. They have never done that, to my knowledge, or at least not in the last 50 years, 60 years. But it is in their power to keep Powell as chairman of the FOMC. Now, the FOMC is quite split. There's several Trump appointees on the board. There's also a couple of Fed presidents that I think lean in that direction, but then there are other Fed presidents that lean the other way. So that would be a huge statement of controversy. I mean, markets would go crazy. But even when you get a good inflation number like today, the bond market really hasn't moved. We're still like at 417 or something on the 10-year. We're still above 475 on the 30-year. So, the bond market is still saying, hey, I'm still a little nervous. But for the short term, this controversy is going to be a big one for the next 4, 5, 6 months, because we just don't know who Trump's going to appoint. We don't know if Powell will stay on. We don't know if Lisa Cook, what the Supreme Court will decide. That's another open position if Trump is allowed to remove her. And that's the issue there. Lisa Cook is a dove. She's going to vote for lower rates. So that's another indicator this isn't about lower rates.
All right, so let's take the scenario that that Trump is not trying to inflate the debt away, right? Okay, it's a way to, to get out of this huge deficit. But like his policies, such as high tariffs, deportation, reducing, the labor supply, forcing the Fed to cut rates. That's all inflationary, very inflationary.
Well, it's inflationary if it comes with low rates. The immigration policy is, slowing job growth in the economy. Job growth is, if you're not growing jobs, then you're not going to be growing the GNP, except we have a really unusual case in the last year and a half. We have something called artificial intelligence, building all these data centers and things. So we've had an infusion of capital investment that is just not typical, and it will die down. So, we're on a slower growth path on jobs. Oh, by the way, jobs, let me add one more thing to your comment. Every February, the Bureau of Labor Statistics does what they call a benchmark revision of jobs all the way through the past year, the whole 2025. It's highly likely that will be a pretty substantial downward revision. Powell even mentioned it in his press conference the last time. The reason for that is that the jobs number is an estimate of small companies that go bankrupt versus newly created small companies. A lot of the new jobs in the companies come from small companies getting started. And the Bureau of Labor Statistics, the BLS, calls that the birth-death ratio. How many companies are being born? How many companies are dying? But typically when the economy is slowing down, they underestimate the deaths. And when the economy picks up, they underestimate the births. And so we get downward revisions when we're in a weakening cycle like we are now, and we'll get upward revisions, 3 or 4 years from now. But that's going to make people more pessimistic about the jobs number. That comes out the first Friday in February. So we're only a couple of weeks away from one yet more market move on this topic. But back to your point, Joel, yeah, it is inflationary. And what you see on net, everything that's going on, if you get these lower rates, you're going to see a weaker dollar and a weaker bond market. And that happened in April with the tariffs, but then it peaked. The dollar hasn't gotten any weaker for 5 or 6 months. And the bonds have been stuck above 4% on the 10-year, but not rising any further. But when we get these things where, the Fed's going to cut, the bonds don't rally. That's not a good sign.
But this bond market has not been a good sign for a long time. I mean, we can talk about how resilient the equity markets have been, but I mean, the bond market's been basically down and out for almost 3 years here now. This is getting to a period like you think, okay, well, they're cutting rates. They've actually physically cut rates 3 times. There's projections to cut more in 2026. Yet we just don't see the long-term yields going down. So what are the bond traders trying to tell us? A lot of people believe bond traders are smarter than equity traders here. I don't know if that's the case or not, but I tell you, they're not. Rates, TLT is still yielding 4.4% here. I mean, long-term rates are not dropping.
Not at all. Not convinced.
No, long-term rates are not dropping. It's a serious warning signal that this Fed independence issue, the tariffs, inflation, is still with us, going to be with us. And the bond market is not at all convinced that we're out of the woods. I'm with you. I'm not quite sure bond traders are smarter, but they do look at very different things.
Yeah.
Equity traders are looking at all what's happening inside companies, and bond traders are flying at 30,000 feet over the economy, trying to figure out this inflation stuff. So it's a very different viewpoint on a lens of how you look at the world. But bond traders are still very nervous.
What's it going to take for long-term rates to go lower? Like, what's it going to take? Like, well, if we get 2, 3, 4 more cuts this year, let's just say hypothetical situation, do the long-term rates finally start to listen, or it just doesn't care about the short end?
If the Fed lowers rates just based on economic data, the bond market might rally a little bit. But if the Fed lowers rates because of perceived political pressure, bonds are not going to rally.
Wow.
And we know that just from looking at emerging market countries for years and years and years, decades. And one of the prime examples in the opposite in both directions is the Bank of England. The pound really lost credibility after World War I because the UK wasn't running the world anymore, wasn't running the financial system. And the pound kept falling all the way till 1997. I actually worked in London in the late 80s, early 90s, and I remember my FX trader friends at the pub would tell me, Blue, it's never too late to short the pound. But the finance minister was always in control of the interest rate, and every time you were going to have an election, they would lower interest rates. It's fairly easy to predict. Not anymore. In 1997-98, they put in the Monetary Policy Commission, a totally independent commission. They even have 1 or 2 members that can be from the U.S. or Canada. It's a very diversified group, and they set rates. And ever since then, the pound's been a random number generator, but it quit falling. So, this independence issue is huge, not just for emerging markets, for very important financial centers like London and New York.
Okay,
the
Blue,
bonds yes.
One more tough one for you. Because you're mentioning, the pound, and you're mentioning other currencies here. If the end game for Japan is to move rates higher, while we cut rates, I mean, isn't this going to result in a major global regime shift, which is going to have major implications across foreign currencies, equities, bonds, and capital flows?
And the carry trade too, maybe. Like, we could get into that too.
I believe that the carry trade has largely run its course. Now, that when we talk about the carry trade, we're specifically meaning short the yen and buy everything else, or particularly higher rate yielding assets. That was a huge trade, but the yen has. I think that trade has largely been unwound, or at least it's not as big as it used to be. I don't see that as a destabilizing. The other thing is Japan has a lot more debt to GDP than the U.S. does, and it's been there for a long time. And they actually have gotten their inflation rate up above their target for the first time in like 30 years. And but their bond yields have not stabilized. They're still rising. And rates, the short-term rates are still super low. They're not zero anymore, but they're very low. So I think the Japanese, the position that if the Japanese raise rates, and the yen is going to rally big enough, I'm very nervous about that. But I got to tell you, I've gone through my career and looked at my currency forecasting track record, and I will tell you that the yen is my worst currency. It has been very hard for me all of my career. The pound has been easier for me. Other things. Right now, I'm bullish on emerging market currencies, particularly more stable emerging markets. They have taken really care of their inflation. They were the first to raise rates in 21, 22 before the U.S. But Japan is, the context is so different. It's such an old society. I don't think they're out of the woods on the currencies yet, but it has stabilized.
Blue Putnam, consultant, former chief economist at the CME, not on Trump's short list to be the next Fed chairman. So that means he could still be on pre-market prep during the inflation data numbers. Thank you, Blue. We'll be dialing you up again next month.
Thanks, Blue.
Thank you.
All right, overtime on pre-market prep here a little bit, but we had to get Blue in here. Little pullback off that high, but the bulls quickly regained yesterday's high, the old-time closing high. Hard to give resistance. Was there when there isn't any? Dennis, anything else you'd like to alert?
I think bulls still remain in control. Obviously, geopolitical Trump headlines will continue to give us chop. The Supreme Court ruling we wait tomorrow. That could be volatile if they rule against. I'm not sure what to think. Like initially, I think, the stock market would rally on this, but I think the uncertainty of paying back all this tariff money would actually could hit the markets too. So it's funny how we come full circle, 9 months later where tariffs are ending the world. And now it's like, oh man, they might rule against tariffs and we have to get this money back. So lots of considerations coming into tomorrow. We'll look for that ruling. That'll be tomorrow's story.